Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your everyday investing decisions. I am Dr. Shifalika Gokhale. I hold a PhD in business practices of mutual fund houses. Energy is the lifeblood of our modern world. We use energy right from running our homes to industries. But historically, we have been depleting our natural resources for energy. The future holds a different view. We are shifting more towards sustainable energy options, and that is the topic of our today's video. We are going to dive into the renewable energy sector with more focus on the solar energy. Recently, the solar sector has been making headlines, especially in China. Now, in this video, we will explore why this sector looks promising, the challenges that this sector faces, why it could be a lucrative investment opportunity for Indian investors. We will also compare the Indian solar industry with major players in China and US. So, let's jump in. Let us begin with first answering why the solar energy sector. Well, here are some points to help answer that question. Firstly, government initiatives. Government has made ambitious plans for renewable energy targeting 450 gigawatts of renewable energy by 2030. So policies and subsidies have been framed in order to support this growth. Secondly, environmental awareness is increasing in the country, and concerns about climate change uh, are also on the rise. There is a global shift towards cleaner energy sources. India is committed to reducing its carbon footprint as part of international agreements. And lastly, technological advancements in the production of solar energy have reduced the cost of producing this energy and making it more competitive in comparison to the traditional sources of energy available in the market. Why does this sector looks lucrative as an investment option? Firstly, there is a growing demand as the economy is expanding. The demand for energy is also increasing. Solar energy offers sustainable solution to meet this growing demand. Secondly, as I already told you, the production of solar energy has become more cost efficient, and in recent times it has become more affordable than traditional fossil fuels. And this may give investors an investment opportunity to invest in this sector through various ways, like investing in shares of solar companies or mutual funds focused on renewable energy. China is the world's largest producer of solar energy at 250 gigawatts, followed by the US, Japan, Germany, and India. But despite being the largest producer of solar energy in the world, Chinese solar energy component industry is facing huge challenges. Some of the challenges that they are facing is due to rapid expansion of Chinese solar capacity. There is an oversupply of these components in the market, which has resulted in reduced prices and further reduction of profit margins of these companies. While polysilicon, which is an essential material in the production of solar energy components, the prices of polysilicon have fallen, but the capital cost for developing a solar farm has risen in China. Thirdly, since the Chinese property market is on a downturn, it has strained local government finances, making it difficult for them to support solar projects. So there are regulatory and financial strains as well. And lastly, as you all know, recently Biden has introduced heavy tariffs on Chinese solar panels. So such anti-dumping duties from countries like United States have further complicated matters for the Chinese solar manufacturers. Let us now look at how India fares in comparison to other major players in the solar sector. Well, when China dominates the solar energy sector, as we have already discussed, its industry is currently facing financial challenges and challenges of oversupply and overproduction. United States focuses on high quality products and innovation, and these are often supported by substantial government incentives. India, which has a renewed focus on solar energy, is rapidly growing thanks to a strong government support, and it is aiming to become a major player in the solar energy sector in the world. Investors should be aware about certain challenges that this sector presents. Firstly, there is high volatility in the global solar market because it is highly competitive and subject to rapid technological and regulatory changes. Also, investors should keep an eye on changes in government policies and subsidies both in India as well as globally, right? See how the US decision of introducing tariffs vastly impacted the Chinese global sector, right? So keeping an eye on such developments is absolutely necessary if you are planning to invest in this renewable energy sector. And lastly, economic factors such as global economy. What is happening with the interest rates? Are they rising? Are they reducing? Are they stable? What is the shift in trade policies between countries? All this will affect the capital cost of setting up solar plants and profitability of solar companies. So these are some of the challenges which investors should keep in mind if they are planning to invest in this sector. How can investor invest in this sector? Well, there are a few ways. You can either directly invest in stocks of companies like Tata Power, Adani Green Energy are some of the biggest companies in solar sector in India. Then you can invest via mutual funds and ETFs which opt for this theme, a renewable energy theme or sustainable energy theme, or mutual funds which are specifically targeted towards renewable energy. Lastly, you can also invest in green bonds which are issued by finance companies, especially in eco-friendly projects. So these are various ways in which you can invest in this sector. Not every type of investment is suitable for all investors. Just because it looks lucrative, it is in the news, does not mean you have to go ahead and invest your money in it. Right? All of us have different risk taking capacities, different incomes, different financial goals. So, our investments should be based on these basic factors. We should never ignore these factors while taking any investing decisions. So if what kinds of investors are suitable for this particular sector? Firstly, you need to be a long term investor. Why? Because of the heavy gestation periods of these projects. If you want your money to increase in short term, then this is not a sector for you. Also, risk takers. Why? Because there is high volatility in this sector when it comes to policies and technological changes. So if you are a risk taker, obviously, which gives better rewards, then this is the sector for you. Also, if you are a socially responsible investor, if you are interested in the ESG theme, environmental social governance, yeah, that theme, if you are more interested in it, then this sector will be a good investment option for you as well. While investing, it is also very essential to keep an eye on the tax implications of your investment. If you are investing in equity shares, then you should know that up to 1 lakh rupees, the gains that you earn are tax free. But above that, your gains from equities in the long term are taxed at 10%, and in the short term are taxed at 15%. Dividends on these stocks are taxed as per your income tax slab. If you invest in mutual funds and ETFs, you should be aware of different tax rules for equity oriented mutual funds and debt oriented mutual funds. So these tax implications are very, very necessary because they impact our returns. Well, to end this commentary, Solar sector in India presents a promising opportunity for investment with substantial government support and growing demand. However, investors should be aware of the challenges that this industry faces, especially from the example of industry in China. Correct. As always, thorough research is expected before you take any investing decision, and the good advice of a financial advisor will help you far better than taking a decision yourself, uh, because it will help you take a more practicable, logical decision based on your needs and demands. So I hope this short video that I presented today added value in your investment journey. If you have any questions regarding this current topic, please feel free to comment before below the video, and I'll be happy to discuss it. Until next time, stay safe. Goodbye.